All right, everybody, interest rates suck right now. On a 30-year mortgage, it is 7%, which is insanely high. So if you're in the housing market and you're looking to buy your first home or possibly move to another one, here is a simple rule that you can follow to know how much house you should afford. It's very simple. It's called the 28% rule. So I'm going to break down what is the 28% rule, how big of an impact interest rates have on mortgages, and what you can expect with interest rates in the future. So in buying a home, follow the 28% rule, which is very simple. Take your gross income for a month, times it by 28%, and that is the amount of money that you should spend on your housing. So for example, if you make $5,000 a month, that's a $60,000 a year annual salary. 28% of that in a month is $1,400, and that should be your budget for housing. With today's interest rates, 7% on a 30-year mortgage, $1,400 equates to financing $210,000 on housing. What's crazy is if you rewind to 2020 when interest rates were only 2.7% on mortgages, a $1,400 mortgage would have been financing almost $350,000. So you would have gotten a lot more house for your money if you would have bought back in 2020. But we're in 2024 where interest rates are insane. As you can see, interest rates have a profound impact on how much you are paying for your mortgage. So 2024, you can finance $210,000 and have a $1,400 a month payment. But back in 2020, when rates were extremely low, you could have financed $350,000 and still had a $1,400 mortgage payment. So what now? The Fed has signaled that they are going to drop interest rates in the second half of 2024. Usually they drop by about 250 basis points. That is 0.25% in a raise. So we could see a drop in mortgage rates from 7 down to 6.75%, which makes an impact, but it doesn't make a giant impact as far as the monthly payments that you're having on your mortgage. If you go back to that mortgage of financing $210,000 at 7%, now if you drop that interest rate down to 6.75%, you will save around $35 a month on your mortgage. You may be saying to yourself, well, I can actually just buy a more expensive house now because the Federal Reserve is signaling rate cuts at the end of 2024 and throughout 2025. And then when rates are lower, I can refinance. And I 100% agree that is an option. But I think if you're going to go above that 28% rule, it is a dangerous game to play because you're just banking on the fact that the Federal Reserve will indeed lower interest rates, where they've signaled interest rate cuts in 2024, but they keep pushing them off because inflation has stayed high. So I think that's a dangerous game. I still think you should follow that 28% rule and keep your housing costs below 28% of your gross income.